What if you could own a piece of a skyscraper, a fraction of a masterpiece painting, or earn interest from real-world business loans, all from your crypto wallet? This isn't science fiction. This is the trillion-dollar revolution of 2026, and it's called real-world assets. Forget meme coins for a second. The next massive wave in crypto is about connecting blockchain technology to tangible, everyday assets. These are real-world assets, or RWAs. The concept is simple. Take a physical asset, like a building, a gold bar, or even a loan agreement, and create a digital token that represents ownership of it on the blockchain. This is called tokenization. Why is this a game changer? Because it solves three huge problems in traditional finance: liquidity, accessibility, and transparency. First, liquidity. Selling a building can take months. Selling a token representing that building can take seconds. It turns a liquid giant into something you can trade 24/7. Second, accessibility. Most people can't afford to buy a multi-million-dollar commercial property. But with tokenization, you can buy a small fraction of it. It democratizes access to high-value investments that were once only for the super rich. Third, transparency. Every transaction, every piece of ownership is recorded on the blockchain. It's a public, unchangeable record, which drastically reduces fraud and disputes. So, what's the scale of this opportunity? It's staggering. Financial giants and crypto analysts are throwing around some mind-blowing numbers. Boston Consulting Group predicts the RWA market could soar to $16 trillion by 2030. We are at the very beginning of a massive shift, bringing trillions of dollars in real-world value onto the blockchain. This isn't just a theory. It's already happening. Projects are leading the charge. Platforms like Centrifuge are allowing businesses to tokenize their invoices and assets to access financing from the DeFi world. Others, like Goldfinch, are providing crypto loans to real-world businesses in emerging markets, offering stable yields to lenders. And major players like MakerDAO are diversifying their treasuries by adding RWAs, proving the stability this brings to the crypto ecosystem. We're seeing everything being tokenized: real estate, private credit, corporate bonds, and even fine art. It's the ultimate bridge between traditional finance and the decentralized future. All right, we've covered the basics of real-world assets, or RWA, but now it's time to go deeper, much deeper. Let's peel back the layers and see what's really driving this multi-trillion-dollar revolution. First, let's zoom in on the specific RWA categories. Think real estate. For decades, investing in prime commercial property was a gain for the ultra-wealthy. Now, with tokenization, that's changing. Projects are allowing you to buy a digital fraction of a luxury apartment building in Miami or a commercial warehouse in Europe. You're not just buying a token. You're buying a verifiable legal claim to a piece of that property and its rental income, paid out directly to your wallet. Then there's private credit, an enormous market that's been the exclusive playground of big banks and institutions. Imagine a growing business in Southeast Asia needs a loan to expand. Instead of going to a bank, they can collateralize their invoices or inventory and issue a tokenized loan on a platform like Centrifuge or Goldfinch. You, as an investor, can provide liquidity to this loan pool and earn a stable yield, effectively becoming a lender in the global economy. This isn't just theory. It's happening right now, funding everything from clean energy projects to small business growth. And of course, we can't forget art and collectibles. A rare Picasso or a vintage Ferrari is worth millions, completely inaccessible to most. But what if you could own 1/1000 of it? Tokenization makes this possible, democratizing access to culture and passion assets that have historically been amazing stores of value. So, how does this magic actually happen? It's a process called tokenization, and it's quite methodical. Step 1 is asset selection and verification. A specialist company identifies a valuable asset, say, a portfolio of business loans. Step 2 is legal structuring. This is crucial. They create a legal wrapper, often a special purpose vehicle or SPV, which legally owns the asset off-chain. This SPV ensures that the token holders have a real enforceable claim on the underlying asset. Step 3 is token creation. A smart contract is deployed on a blockchain like Ethereum, minting tokens that represent fractional ownership in that SPV. Finally, step 4 is distribution. These tokens are offered to investors through security token offerings or on specialized RWA marketplaces. Each token is a digital key, unlocking the value of a real-world asset. Let's talk about more projects making waves. Look at Ondo Finance, which is tokenizing used treasuries, giving crypto-native users access to one of the safest yields in traditional finance. Or Maple Finance, which facilitates under-collateralized loans for crypto institutions, all transparently recorded on-chain. And then you have platforms like Realty, a pioneer in fractional real estate, which has been successfully paying out rental yields for token holders for years. These aren't just ideas. They are functioning businesses building the rails for a new financial system. Now, it's not all smooth sailing. We need to be realistic about the risks. Regulatory uncertainty is the big one. Governments are still figuring out how to classify and regulate these digital assets, and rules can change quickly. Then there's Oracle risk. How do we get reliable, real-time data about the value of an off-chain asset onto the blockchain? We rely on oracles, and if that data feed is compromised, it could cause chaos. Custodianship is another challenge. Who physically and legally safeguards the underlying asset, like the deed to a house or the keys to the vintage car? Trustworthy, audited custodians are absolutely essential to make this whole system work. But despite these hurdles, the future is incredibly bright. Let's fast forward to 2030. Imagine a world where almost everything of value is tokenized. You could own a piece of your favorite sports team, earning a share of their revenue. Scientists could fund their research by tokenizing future patent royalties. Entire city infrastructures, like bridges and roads, could be funded by citizens who earn yields from toll fees. This isn't science fiction. This is the ultimate vision of RWA, a truly global, transparent, and accessible financial market where value flows frictionlessly across the world. The bridge between the digital and physical worlds is being built, and we are all getting a front row seat. Thanks for watching, and don't forget to follow for more insights into the future of finance. But let's be real, it's not without its challenges. Navigating the complex legal and regulatory landscape is the biggest hurdle. How do you legally enforce on-chain ownership of a physical asset? How is it secure? These are the critical questions being solved right now. Smart contract risks and the reliability of the data connecting the physical asset to the token are also things to watch. So, what does this mean for 2026? By then, we expect to see much clearer regulatory frameworks, making it safer and easier for everyone to get involved. The technology will be more mature, and the bridge between DeFi and traditional finance will be stronger than ever. RWA will be a cornerstone of diversified crypto portfolios, offering stable, yield-generating assets backed by more than just code. This is your chance to get in on the ground floor of what could be the most significant evolution in finance in our lifetime. It's not just about hype. It's about real, tangible value. The trillion-dollar opportunity is here. Are you ready? If you found this video helpful, hit that like button, subscribe for more deep dives, and let me know in the comments which RWA project you're most excited about.